Wake up, motherfucker. GetCrack. Wake up, motherfucker.
Hey, what's up, guys? So I got this thing working. I figured out everything again, StreamYards, all that stuff. Oh, great, great. This is January 4th, 2026. Happy New Year, guys. Let's start the show. Let me see what I got here. Sorry I couldn't stream yesterday. There was too many people streaming. I'd rather just watch streams than stream. Takes a lot of, you know. All right. Let's start with some stuff. Let me see, figure out how to do this again. Because they changed a lot in StreamYards over the years after I stopped streaming. They added all these features which I don't need, want, or care about. But all right. Okay, I like background music. I probably should have put in some my own background music. Let's see what they got nowadays. Oh, they still have that BS one. All right. Hate that one. How about this one? Eh. Oh, I hate that one. All right. Let's go back to the usual daydreaming one. Okay. You're live on YouTube. Yes, I am live. I'm live on YouTube. Kick everything. Great. Let's go. Let's start. Let's start talking about stocks. Oh, boring boomer talk. Let's go. Do it. Let's do the boring boomer talk here. All right. Let's share something. Share screen. No, I don't want that. Okay. Which one's this one? Okay, here we go. Make us rich, crack. Okay, we'll try. So, in October, we had the Hindenburg omen triggered. Okay? And this signal is pretty reliable. Pretty damn reliable. Only a few times it doesn't work. Most times it will work. So, here's a little explanation from the guys. I'll use this one here. The Hindenburg omen is a combination of technical signals that together forecast the likelihood of market crash. Okay, the music's a little bit too loud for me. Let me try to. Oh, freaking StreamYards, man. Why they change everything? Just move this over here, move that over there. Okay. All right, too loud. There we go. Let me put this on full screen. Okay, there we go. And so the Hindenburg omen is a combination of technical signals that together forecast the likelihood of a stock market crash. The technical inputs are the 10-week simple moving average, new 52-week highs on the NYSE, the New York Stock Exchange, and new 52-week lows on the NYSE, and the McClellan oscillator. So I'm not going to explain any further than that. You can read it yourself. I'll give you the link, okay? Put in chat for you. Yeah, it's ominous. That's the whole point. Yeah. Okay, good. Channel that channel. Perfect. Good. So all you need to know is that it's a measure of a difference in how the stock market is reacting. Like, let's say the S&P 500 is moving up. So from the outside, you look at the stock market, it's like look at here, right? Here, I've got to zoom in. I'll just zoom it in here through this thing. All right, good. Zoom out. You see here before COVID? So probably late January into February, the Hindenburg omen was going crazy. There were tons of stocks that simultaneously made new highs and new lows, meaning that, like, let's say you had a stock like Tesla, it's making new highs, and then you had a bunch of crappy stocks like going down like mad. So why would it happen where people are diverging? You had so many stocks that were telling different things, you know? So, but the broader market, the overall average between the two, having lots of stocks going up and a lot of stocks going down at the same time cancel each other out, you would see nothing. So if you just track like, oh, I look at the Dow Jones every day on CNBC or something, it just keeps going up, right? But underneath it, when you look at individual stocks one by one, you're seeing like, wait a minute, there are a ton of stocks that are just wildly going up and tons of stocks that are wildly going down at the same time. That's not healthy. So this omen signal gets triggered. And what that tells you is that they're not in agreement, then you have a problem. You are going to crash. All right. Now, that's not a guarantee, though. There are sometimes this signal does not work. All right. If I go further back in the years, because you can see times when it doesn't. But for the most part, you have to pay attention now. There will be a crash coming, potentially, right? So now we have to look at other signals. So over the last year, when I was doing these shows, I started giving you more and more little indicators to watch. The other one we have to look at is, before we continue, let me show you what the Hindenburg omen looks like, and you could look it up yourself. You could go to stock charts and type in !BINYHOD. Okay, so let me just give you that ticker symbol here. All right, here you guys go. There you go. So go to that ticker symbol in stock, monitor the Hindenburg omen yourself. And if you look at it, it goes from +3 to 0. So when it goes to 3, that means all 3 conditions have satisfied. So you only pay attention when it hits 3. So it hit 3 here a couple times, but you see, it's only happened twice. So I would ignore it. Here happened twice, spaced out. Here it happened a lot. So then I start worrying, right? So this was like in 2017. So let me zoom in. And it started going higher. So the stock market started going higher, higher, higher. And then it triggered again and started going down. But what happened after that? In 2018, we didn't have a crash at the first half of the year. It kind of just went sideways. And then once it started going up again, we started getting more of these just before this correction right here in the last quarter of 2018. I believe that was like a negative 20% drop at the end of 2018. And that was because the Fed screwed up. So if you look at this triggers by itself, it doesn't guarantee you can time it perfectly. This trigger is not going to work out for you. All right. So it could do it early, like back at the end of 2017, but the real effect wouldn't have happened until almost a year later. So it doesn't mean like, oh yeah, the trigger happened, I'm going to short. It's easy. It's easy to make money. Wrong. We could be going up for another year. And then when I see the Hindenburg omen trigger again, then I'll be like, okay, maybe this time is the real top and it's time to short. So this is just probably, in my opinion, this is a warning shot. This is a warning shot. You got 1 year, probably another year until we get the real crash. So there's going to be some kind of crash that happens this quarter, but it's just going to fake out again. It's just like what happened in April when people were just freaking out over Trump and all that stuff. But the thing is, come on. It's because earnings sucked. It sucked the first quarter. So all the Trump stuff just made it worse. It just made it so that people were like, well, all the AI bubble stuff, now maybe it was the top. I don't believe in AI no more. And then all those AI people, once Trump started talking more and more about tariffs again and tweeting about it, it just caused fear in the markets and it caused a massive whipsaw. So all the people started shorting like crazy, right down to April's bottom. Okay. Now let's go to the other side of the equation. Let's look at the positive indicators. Okay. So the Hindenburg omen will tell you when there's a top. Now, how do you tell when there's a bottom? Okay. Let me go and get that, and then we'll go back to what I wanted to really talk about, the sector rotation stuff here. We need to talk about when is the business cycle and all that. Let me get rid of this stupid dialogue. Here we go. Get rid of that. I get rid of this thing. What's this big X doing here? Okay, whatever. And so let me see. Where is it? I wish I was more organized, you know. You definitely need a producer for these things, because then you got all these figures and charts to manage. Okay, we're gonna go if we have time, because I don't want to cut into Ruby's show. Ruby you'll have D-Dog show up on Ruby's stream, so that'll be a big event for all you drama watchers and viewers, and that's gonna be interesting to see too. I'm definitely curious to see if Ruby is pregnant. I don't know why I care about that, but okay. We also have this thing to discuss, the Brenner cycle. Yeah, okay, we got that to discuss. I mentioned this one before, so we'll have to look at it again, do a review, look at some charts here. Perfect. Okay. Let me see. Okay, so we're gonna discuss now, when do we know when there was a bottom, right? In April. So basically a couple times after that April bottom. And I didn't bother streaming no more because like I was on kick after looking at all the Thorpe drama and all that stuff. And then I got suckered back into the Thorpe stuff, and I was like, okay, I don't want to stream no more. I'm just gonna be a watcher again, just watch stuff. Because there was just so much content that was happening on Kick, even after the Thorpe stuff at that time in the summer. So I said, who cares? Who cares? This is important, though. Death Cross versus Zweig breath thrust. I talked about the Zweig breath thrust before. And you can look up Zweig. He's a very popular guy, Martin Zweig. And he developed this thing called a breath thrust. And in this case, we look at how many stocks jump up, okay, from a very bad low. Okay, once you have a bottom, what you'll start seeing is that there are a lot of stocks that will just shoot up. You know, the number of stocks that just start going up versus going down changes. So when you have a crash, literally all the stocks will probably go down together. There are very few stocks that have positive return in the day, right? So each of the days you look at it. So at the end of the day of the stock market close, you go, okay, how did it do this today? S&P probably dropped like 3%, 4%. Then you look at the individual stocks and you go like, okay, how many stocks dropped like 0.1%, 0.2, 0.3, 0.4, so on and so forth. And if they start changing where like, even though the stock market overall is like basing down, going down, and then all of a sudden you start shooting back up, and over that 10-day period, so this is what the thrust is. So over the 10-day period, it measures the breadth by analyzing how many percents of advancing stocks relative to the number of total stocks. Okay, so this is a fraction here over a 10-day period. So within 10 days, if I see it jump from below 40%, where stocks are like 40% of the stocks are going up, to now 61.5% of the stocks going up within a 10-day period, then that rally is uniquely strong, very strong. So it's not a fake out. It's not just going to drop again. So the conditions are very tight. You have to pass this condition. So this is very rare condition to have. So very few times this has happened in the history of the stock market. So I'm not going to bore you with all this other stuff. You can do it yourself. And this link is in the description. Okay, so you can look at all the stuff I'm talking about in the description. So I cited all my sources here like a good academic. and you could look at the details yourself. But it's not important to know as much as you can from this. All you need to know is that once you see this indicator shoot off, it means that you will have a great time in the stock market. After I saw that, I said I don't bother to like stream anymore. Like you could pick any stock in the stock market. You could just buy an index. You could do anything you want. It will go up. There's going to be very few stocks that will just go down for the rest of the year. Very few, or maybe just like go sideways or something, you know? Um, so unless you were dumb and picked all the wrong stocks, you would probably be fine. So I said, don't bother. Don't care about stock picking or anything like that. You just pick whatever you want, buy and hold, trade. Who cares? It's no longer important. It's just an easy game. It's just like shooting fish in a barrel. You just couldn't lose. Once this rare trigger sets in, you won't lose. So anything else we gotta see here? I think this one is interesting. So the percent change of the Magnificent Seven stocks. The Magnificent Seven, if you guys remember, are the top mega cap stocks in the S&P 500 that people always keep looking at, because these 7 stocks make up 40% of the S&P 500. Okay? Think about this. 7 stocks control the way the whole stock market moves. The rest of them probably don't have much of an effect at all. Okay? If Microsoft goes up and down 2%, it will probably make the S&P 500 go down up and down 0.5%. That's basically what it means, right? Something like that. Now, let's look at how they were in April 8th. Like that was probably near the bottom or the bottom. I think so, right? So Microsoft was like negative 14.5%, and then you go all the way down the list to Tesla, negative 38.5%. And then when you look at it to April 25th, when this indicator shot off, it went positive 10.5% for Microsoft, all the way to positive 28.4%. So when you have a real bad time, and then within a short amount of trading days, you have to remember there's no trading in the stock market on the weekends, right? So unless you're doing futures, we don't count that for this qualifier. We just look at the trading days, the real trading days from Monday through Friday. And that's not many days between April 8th to April 25th. And when you have this big change like that, yeah, you're good to go. You're good to go higher. All right. So that's what basically this wide breadth thrust essentially means. You just want to look at, okay, how low did it go from a certain date to how high did it go in a later date within 10 trading days. Okay. 10 trading days, meaning 5 days a week of trading. So that's 2 weeks, essentially. You have 2 weeks to prove yourself and fire this shot out. Okay, let's continue on. Here we go. I'll give you here the statistics of how good this signal is. And this is why people believe it and why it's just like no brainer. Once you see this signal shoot, don't think anymore. No more thinking. Man, I don't think this thing archived the images correctly. Oh, too bad. Okay. I'll just go to the main site. Okay, whatever. Cookies. Okay. So a rare and very bullish signal just triggered. And this was in April 25th. All right. So, I mean, it triggered the day before. So if you look back all the way to World War II, essentially, or just pre-World War II, we got, how many times did this signal here? Man, well, they make these things low resolution too. Good job, guys. All right. So probably 1940s. Okay. So sometime before that, 1950s here, 1960s, a couple there. So we only have about 6 signals over the past 20 years from 1940, 1960. 1, 2, 3, 4, 5. Another five fired off in 1970 to 1985. And between 2005, 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 in 2005 to 2025. So 9 signals in the last 20 years. So that's how rare it is. All right. So once you see that, you're like, I'm done. I'm done. So I didn't need to do nothing. And so you know what I did? This is what I did. Once I saw that single trigger, I go, well, what's the most sensitive stock to Trump? What's the stock that will really roll up? You have to look at Trump and AI. So if everybody thinks the market is doing well again, and people start chasing and hyping everything up again, which area of the stock market do you think would do well into the end of the year? Which one? Right? That's your question, homework question to answer. Well, guess what? Guess what? I'm still waiting for Nvidia to dip so I could buy. Yeah, it will dip in the first quarter. So don't worry, that one will dip. I'll show you a chart after showing you some projections of the cycles for Nvidia. But for now, we're not going to do that. Let me see. I'm going to stop sharing this screen, share my other screen. So I'll let you guys think about that question though, right? But I mean, the answer is here, essentially. So what's this chart am I looking at? What's this one? So what's this one? What's SOX over NOX or NDX? What is that? What's this chart I'm showing you guys here? So what this is a ratio chart, a relationship chart between semiconductors and the NASDAQ 100. Okay. So it shows you how strongly the NASDAQ 100 is overperforming or underperforming the NASDAQ 100, the overall tech market. So just the semiconductors. So I just want to see how strong are the semiconductors compared to the broader tech market. Now, let's look back at COVID, right? Let's see here. So it was following the NASDAQ. It wasn't doing anything. So during the COVID time, it was going sideways. Then around August, it started outperforming the NASDAQ. But for the most part, it follows the NASDAQ, right? So you can say like from 2021, it's just following the NASDAQ pretty much because it wasn't really breaking out of this channel here. So it's like going up and down between this channel. So if you bought semiconductors, you probably weren't getting any real benefit from not just, why don't you just buy the NASDAQ 100 directly? Why do I need to waste my time and look at which stock should I pick in the semiconductors? If I could pick Nvidia, sure, I could pick TSMC, I guess, but they probably wouldn't have done that much better than NASDAQ 100 between like March of 2021 all the way to December of 2023. Then what happened then? It broke out. So sometime in October to December of 2023, the last quarter of 2023, then I would have to be thinking, so should I buy Nvidia? So that's the question, right? So that's what you're going to have to ask yourself. When should I be a stock picker and when should I not care, just buy the index? Now, if you look at here, in 2024 of July, we had a big failure. So you got this in the mid-July, 15th of July, that week. And then all the way down to the last week of July, we had this into August. We had this happen. And then since then, it just went down. It was underperforming the NASDAQ 100. It was underperforming. This was a great time to short some kind of semiconductor stock. One of these semiconductor stocks probably was like going down really badly. So you would probably pick a crappy small cap semiconductor stock to short and just ride it all the way down into here, April of 2025. So in April of 2025, guess what? It starts outperforming. And that's when I saw the Zweig breath thrust right here. April, late April, I decided, that was the bottom, right? Now, why don't I just load up on leverage semiconductors? So I just bought this. I just bought SOX L. So if you bought SOX L and just loaded the boat. So I bought a little bit when it really was the bottom. But when I saw the Zweig breath thrust hit, I decided load up even more. And you go, and let's say you bought here, bought a bunch of them at 11. You went all the way to 46. You got a 300% return. That's it. No brainer. No brainer. Turn off your brain. You see the Zweig breath thrust. You know, Trump is against China doing semiconductor stuff because he's like, oh, you block mergers for semiconductor companies, this and that. And then you have this other AI boom. Oh, AI is great. AI is great. They're going to keep talking about AI forever. For now, it's just like, all right, you know what? This is the easiest sector to just buy everything, load it up, leverage the shit out of it, and just go up. That's it. And you got instant 300%. That's all you had to do. Okay? That's all you really had to do. There's really nothing else to think about. And so essentially, that's why I didn't bother. Don't need to think. You just do that and you're done. Go home. Go home. Go spend time with your family. Don't worry about this shit. Don't waste your time thinking about it. So in certain times of the stock market, there are times like these when you don't have to think too hard and you'll just make a ton of money. And that's it. Don't need to do a damn thing. Okay? But we're entering a time where we're going to have to start thinking again. Because guess what? Look at this ratio. Look at the ratio here. Let's go back to the ratio chart. SOX over NDX. Where are we at right now? We're right here back at the top, right? We're right here back at that top. That's the problem. This past week, we started the New Year's with a big bang in the semiconductor sector. It was one of the few sectors that was up from the Christmas till now. So it's still going strong. Which of those stocks is actually moving up that well? Is it Nvidia? Is it Nvidia? No, it's not Nvidia. Okay, well, who could it be? Is it Intel? Is it Intel? Intel's doing better than Nvidia, but no, surely it can't be that. Oh, wait. It's RAM! RAM. Everybody's whining and complaining about memory prices. Oh, it's RAM. It's just RAM. And so, how well did Micron, MU, do from April till now? 375%. God damn. God damn. Why did I bother buying SOXL? XOXL is just 3 times leverage of the semiconductor index. Why didn't I could have got a little bit more if all I had to do was buy one stock and one stock only. I should have just bought this one. What the fuck? Damn, it did better than SOXL. Oh, man, I just did not expect everyone just to be really believing in AI. AI. Oh, lordy. And you know what looks like this chart? What looks like this chart too? What looks pretty similar to this chart in the commodity sector? What is everyone talking about? Silver. Doesn't that chart look familiar? Why does Micron kind of look like silver? Well, because memory chips are a commodity. They are basically like silver. Silver is a industrial metal too. Silver is not just for people worrying about the collapse of governments or whatever, like gold is. Gold is just that. Nobody uses really gold for industrial purposes except for a few very niche products. It's actually silver. Silver is used in a lot of places. They used to use silver in teeth filling, right? Man, I should just go to. I probably shouldn't go to my dentist and be like, well, could you use silver this time because it's fucking goddamn expensive. So hell no. Just use mercury, baby. All right. So, speaking of mercury, let's look at copper. Copper. How about copper? How does that look like? Yeah, it looks kind of similar, but not really because you had this huge copper crash in July, which is funny because I believe it was like Goldman Sachs or one of those, small hat institutions that told everyone to buy copper. Guess what? Just when they were telling people to buy copper like crazy, guess what? They put this crash in, and hell, we went back up, and we're back here. So all right, guys, copper recovered, but is it done recovering? Are we just going to go sideways, down, or up? Are we going to break out? Well, that's a good question because that will change how I look at silver too. So silver, copper have a relationship. They're both heavily used industrial metals. Okay, silver is just more for more boutique purposes than copper is. So I have to wonder with Micron also doing the same thing. We have to really think about these things in the new year. Okay, guys? So that's why the title is Micron, Silver, and Copper. Those three things matter. Anyway, you got a super chat here. Yo, what you think about MicroStrategy? And I told people to short MicroStrategies long ago already. Like, you know what? It's too late to short MicroStrategies. It's done. It's done for now. Dude, if you want to short MicroStrategies, you gotta wait. Now you gotta wait. You gotta wait again. Because what's gonna happen is this thing is gonna recover to maybe 246, and then I'll probably short it again. Yeah. So that's when the real Bitcoin crash will happen. Once this thing recovers, then you'll know. But otherwise, bro, after it did this in July, dude, it's done. This was toast. You just start shorting here. So I shorted here, got out here. When it did this, when it bounced back to these lines, okay, that's what these lines are. These are the moving averages. That's why you use them. It's freaking easy. It's child's play. When you go up and down through the moving averages, then you know there's some issue going on. Because once you had this top, right? You had this top. This is a weekly chart here. November 2024 was the last high up to 5 something. And then you had this second top here the next week in Thanksgiving week, 440. 440 was your baseline. So this line, you draw it out, 440, all the way here. Guess what? Guess what happened in July? Guess what happened in July? It hit 448, right? It tried to get a little higher, 460. And then the next week, it just crashed right back into this box I drew. Oh, once you saw that, you're like, okay, this is over. Get ready to short. Get ready to short. Okay, look at it. Went down, went back up, recovered a little bit, went back down. You're like, okay, yeah, I'm shorting this sucker hard. So it dropped to here, right? It went through this blue line, goes back down to this orange one, down here into September 22nd, the week of September 22nd. Then it took a break. It had to recover because that orange line right here, set in the November of 2024, was actually like the top of this little area here. So if you zoom in to the February 2025, this box, you can just imagine this box right here. Once you see these charts so many times, it's so easy. You look at it. It's a box. Okay, it's a box. So I get this box, right? Fight, 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 fight. It's fighting up and down in this boxed area before it jumps out, touches and kisses this moving average line, this purple one, and then it breaks out, goes up higher. Right? Because it was touching this so many times, the yellow one moving up, and then it finally broke out of this box. So if you wanted to go long, you probably would have done it here. You would have been like, wait a minute, okay, it has this great green bar. It had a higher volume, right? That week of April 2025, right there with the stock market. Bitcoin's probably going to fly with the stock market. It follows the stock market essentially. You would have been like, go long, go up. And then once it hit this boxed area, I was like, okay, you get out. That's what you would have done. That was the long you would have did from here to here, from the end of April to May. And that was it. That was done with MicroStrategies for the long side. And then if you wanted to go long again, you would have to wait for it to finally break out of this previous major point of 440. If you couldn't break out of 440, you're done. And I think that was the same time that Bitcoin tried to make a big rally and run and completely fail. Okay? And that's it. That's really it. And that's it, man. That was all you had to do. And then, and I told John, hey, bro, you shorted MicroStrategies in the 90s. You really want to short it? Short it right now. And this was during this week right here. I think around October 13th. So the week after this huge red candle, I was like, bro, short MicroStrategies. And it was like, boom, crash right into December. That was it. That was the last big one for MicroStrategy. So if you want to short MicroStrategy again, you got to wait. You got to be patient. Find the right time to short it. And the best time will be when it hits and kisses this purple line. When it recovers, finally kisses this purple line, you're like, yeah, I'm ready to short it. Because where's the next target after you short MicroStrategies? Probably all the way down to 100. So you can short from 250 to 100. And maybe you're lucky. Maybe the stock market is in such a turmoil, it'll go all the way down to $50. $50. That's it. $50, man. You can short it from 250 to $50. Maybe. I don't know. But it's a potential. The potential's all there. So, there you go. Okay, guys. I think you guys got it. I think you guys understand what's going on there with MicroStrategies. Okay. So back to the articles again. Unless there's any other questions. Nothing. Yeah, that's about it. Okay. So somebody asked about Nvidia though. I remember that. So I might as well get to that one then. Stop screen, share screen. Okay. Where is it? Okay, right back here. Back to that. I'll get back to the swag breath thrust again later. Let's look at Nvidia before I forget. Let's see. Did I screenshot it somewhere? I think I did screenshot it, but I probably put in another folder. Hold on, guys. Yeah, I should do it before I forget. So this is from what's his face? Larry Williams. Yeah, very important, popular. Let me see. So I have this stuff. Let me grab all these pictures that I got, and we could do it all at once. So hold on. Let me stop sharing and let me try to get everything together here. Okay. Put it in one folder. All right. Okay, let me get it. Let me get it for you guys. Video forecast. Good. You need that. And what other ones you need? You'll need these. What other ones? This. Okay. This one. All right. Okay, let's see. Okay, got that. All right, okay, got that. Okay, all right. Here, I got everything set up. My folder set up. Good. Yeah, I wish I had a producer, guys. Sorry. You know, I'm just a one-man show right now. With this stuff, China corners. No, I don't want to show the dumb thing here. That's not right. Show this. Share screen. Okay. All right. Yeah, this one. Okay. So this is the Nvidia forecast that Larry Williams did, and this is what the prediction is. So in 2026, for the first half of the year, it will do this. There will be some kind of panic going into February, maybe through March. And then there'll be a recovery going into the back half of March, April, and then May. So if there is a dip, if you are still waiting to buy Nvidia, that's your chance. Okay? So whoever asked that, whoever was waiting for Nvidia to buy a dip, you'll get a dip there. All right? Now, let's see what the whole S&P 500 will do. Okay, what will the whole S&P 500? Because Nvidia is one of the top 7 mega cap stocks, and so what will it do? And this is the cycle analysis I have here. All right, and we got peaks. We got peaks here. These are the 3 peaks. These are the 3 cycles that dominate. Okay, so we got one peak at 200 days. We have a 200-day cycle. So this thing topped out around September 2025, the 26th day. We had a top right here. And probably what's been happening is we've been going sideways, haven't we? You really haven't gotten anything higher than what was made in October. We kind of made a slightly new high, I guess, in December, but not much higher than what was done in October. So we've been going sideways. So we'll just continue going sideways, or we'll start moving down past the low. Okay, the low that was made here in November 20th or something like that, right? Just before Thanksgiving, I believe that was the last one, last major low. And so if we drop below there and there's a big panic going into February, that'll be your chance. That'll be your chance to get it. All right. That's it. That's it, baby. That's all you gotta do. That's all you gotta wait for. And so you can short it. You can definitely short Nvidia for sure if you want. But I rather would just short Micron. Why bother with Nvidia? If I thought semiconductors was gonna make a big drop, why wouldn't I just short the king? The king is Micron, not Nvidia. The king is RAM. Kill the king, baby. You want to short? You want to make some real money? Short that. Short Micron. So if you can make some good money between late January into February, that's what I would do. I would just be looking at Micron like a hawk. I would just be looking at that sucker and be like, when am I going to short memory? When I'm going to short memory? I want to short that RAM, the RAM cartel, right? So let me add these other 2 signals, 81 and 127. So once you add those 2 signals, you get a little better of a picture, because now you see It's the shape matches more closely with the market. It matches more closely with the April bottom, and then you had the bottom going up, and then you had a little break, and then you had a little higher top. Then you going sideways and then back up. And guess what? This top is in January 9th. Okay, guys? January 9th. So, is the top going to happen around January 9th to the 13th to the 19th and the 28th? So, sometime into the back half of January, I will look at Micron to short, probably. Okay? And maybe even silver at the same time. So, that's why I titled my stream that. Okay? So, now you understand. So not only you should understand when you should do, if you do shorting, you got to time it well, because I don't want to waste my time thinking about stocks. All right. I rather make money and not think about it passively. And the way you do that is you have a system like this where you can tell me when is the real bottom. I don't care about these little bottoms and little tops. I don't give a shit about this. If I want to waste my time trying to manage the noise here, this is just noise, up and down, up and down, up and down. I want the big one. I want the big short. I want it to go down like crazy into March. This is the one I'm looking for. That's the one I'm looking for. I don't give a shit about that. Otherwise, I'm going long. I'm just buying the dip and not even caring. Okay. So that's what you got to think about. Anyhow, done. I think that confirms your little answer about Nvidia and stuff, right? Okay, let's look at another thing called the global leading index and financial index, or whatever it's called, the liquidity of the central banks, basically. But we'll look at that later. We'll get back to this. But let me finish the Zweig breadth thrust. So going back to the Zweig breadth thrust, a rare and very bullish breadth thrust signal just triggered. So this is why when I saw this in April, I didn't bother streaming. I said, fuck this shit. I don't care anymore. I don't need to tell anything to anyone. It's just like you just buy something, it'll go up. So this is all the statistics, and you can look at the description in the video, and I give you the links to this stuff. Okay, so you can look at this yourself. But in general, this is what you should know: the average 12-month return after a breadth thrust signal is 23.4%. Median, it's 24.8%. Not much difference there. Okay, so about 24%, let's say 24%. So after you see that signal, you get a 24% return on the index. So that means the S&P 500. That's all it is. So let's look at what the S&P 500 is doing right now. Let's share screen. Okay. All right. Okay. Let's go back here. Okay. Let's look back at the S&P 500. So I'm gonna get rid of this. Okay. And so the breadth thrust signal fired around April 24th, and then people started talking about it the day after, Friday, April 25th. So this day was when the breadth thrust triggered. Okay. After that, you would have been like, coast is clear, no more shorting, market is just go long, go buy the dip, who cares? And guess what? After that signal, how have we done in the S&P 500? How have we done? We hit the top here, 25.96%. So we did it. So after that signal hit, we made it past 24%. So we've hit the average performance after a Zweig breadth thrust. We're done here. We're done here, folks. You got your returns, okay? You should be happy now. Go home. You made your money in 2025. Don't be greedy. Don't stick around for 2026. Wait and see what's going to happen the first quarter. Then decide if you want to jump back in. That's what I would say. So if you guys sold for tax reasons this week, so you waited for 2026, good for you. The next time we need to worry about taxes, April. Okay, not because of tax day, but because the reason why I say this is because the bottom that was made in April 7th on the Monday, it will come around again, right? Let's see what the 7th is. Tuesday, April 7th, 2026. So people that are waiting for long-term gains, so the people that bought at that bottom are waiting for this day to sell because they don't want to get short-term tax gains considerations for their positions. So there are still some people that will probably wait until April to sell for long-term gains. All right. So what's going to happen now is like between now and then, there's going to be people that are going to get worried. They're going to be like, oh shit, what is the stock market going to do? Okay. What is it really going to do between now and then? Because I want to hold my positions and wait till that day. And there's going to be people that are getting really afraid. I bet you really afraid because let me see which thing I should use here. I'll use this. Yeah, let me use this. Let's say it does this. Let's say we do this. Let's say we drop to here. You think they would sell then? You think they get panicked and sell then before their tax considerations? Because let's say they held their S&P 500 index up till then. They still made about how much if they bought right at the bottom? 33%. So they'd probably be like, well, I lost like maybe 5%, but I don't want to pay the tax man, so I'm going to keep holding. Well, what's going to happen if it starts dropping below that? Will they start panicking and say, uh-oh, that's as much as I was going to pay the tax man, and I'm going to start panicking and getting the hell out? What if it's like that? What if we're going down here, huh? That's about 7 point. You know, the reason I'm drawing it like this is because this is the last bottom here. So I'm just looking at the chart. I'm going like this. You see that? So it's like, let's say it cuts through that line and goes down there. you think they would sell then? Because it's like, well, do I pay the IRS their little cut or for short-term gains, or should I just like wait for my long-term treatment? Because you have to understand, when you get long-term capital gains tax, it potentially is 0%, right? Because there's a lot of low-income people that have like played the market like me, right? Because I don't technically make income. Okay, so I just purely just make it on the stock market. So if I have very little short-term gains, I have very low income. So it's just the capital returns I make from my long-term positions. It's just like I don't need to make that many short-term trades or anything like that. Then my income is very low, right? Something. Or I could just hide in an LLC or do some BS like that, I guess, if I really cared about trading that much. But in any case, you would have to wonder, damn, it's I rather just take my profits and suffer the short-term treatment, right? Because now you're getting more worried. Like, look, what happened if it drops down here? So this is like the next low. That was the low made around July 2025 to August 2025. So that's like a drop of 10%. This is getting worse. So this is what I'm afraid of. I'm afraid of the fact that it's way too easy to start making people panic and sell, because they're only holding on the hope that they can make it between tomorrow and April 7th of 2026 to make their positions long term. Okay? Long term. That's it, man. That's really the problem I'm having here. So it makes sense when you look back at the cycle charts I did, why it possibly could just drop into April. So with the Nvidia and stuff, yeah, you could probably keep waiting. Wait for February and March and see how it goes. You could probably get a real nice deal on Nvidia. That's it. Okay. So anyway, somebody said about oil shorts. Oil is too low, dude. It's It's the problem. The problem now is that like it's just so low that if there's gonna be a big drop on Monday, I would just go long oil. So let's say the Venezuela stuff kind of shocks the market and oil starts dropping like unrealistically. It's just an overreaction on Monday. I just go long all oil. You know, I'm not really that interested in playing that, but if I see that, maybe I might play. I might play a long in oil instead. You know, they just overreact on the news and then all of a sudden it just recovers. And then after that, China starts fixing its issues because a lot of the reasons oil is so depressed right now is the Chinese economy is so shit. It's still shit. It's been shit. It's ridiculously bad. Like a lot of oil demand comes from China. If China doesn't recover its economy, it really depresses the whole total oil market. Okay. Yeah. So I just saw an article that said SP projected to stay up this year. That's good. As long as the mainstream media keeps saying the S&P 500 is going to go up, that means it's going to go down then. I'll see you. Bye-bye. That's it. So that's it. That's it. So then, yeah, you'll have to see what's going to happen then. Okay, what else? What else we got to cover? What are my favorite little stocks to talk about? Oh, Palantir. Yeah, my little favorite Palantir, right? So the last high was made in around August 2025. It went a little bit over that in November. And the first week, people are selling, probably because, yeah, tax reasons. They're like, oh, I don't want to pay taxes for Palantir gains in 2025. I'm ready to sell now in 2026. So Palantir definitely, if it drops below 150 here, then it's probably a great candidate for a short. Because you see this is why I drew a box here, because this was the same important level. You can see high volume bounce in August 20th, and then it did it again, but lower volume, a lot lower volume in November of 21, because that's Thanksgiving, so nobody's really trading too hard then. And this was just a kind of like a yawn recovery, you know. It's kind of like, okay, well, we got some new buyers here, might as well just go up a little bit here, trap some more buyers up here at the top, and then we start selling off again. And then so the next time it hits 150 and goes below that, then that's it. You're done. That's it. You're done. You're probably going back down to 125. Okay. So yeah, that's another thing. But I rather just short Micron. Micron is just more interesting right now. But yeah, you could short Palantir too. You could do the same thing with Palantir. But we'll see. Yeah, we'll see. Let me see. Let me see. How much could I get? Let's see. How much could I get shorting this thing here? Let's say I short around here to here. 28% down. Yeah, that's okay. Like, let me see. Compared to Micron, how much could I get? Micron. Let's say it goes a little bit higher, right? Let's say it has a little bit more pump to it. Let's say it pumps up to 340 or something like that. I think it'll cut through here. So 50%. Yeah. So yeah, I'd rather short Micron. I think I could short that one. Yeah, I think I'll short Micron instead. So, okay, let's see here. We got someone saying Palantir has been a blessing to me last 90 days, but they've been fucking me crack. I've had them years. Yeah, I had them years too, you know. I had them, but I only started telling people to get into it in real life around here. So I was in early so after the IPO, I was waiting for the drop back down to the original price here or lower. So it was real nice because you had the bear market in 2022, right? When you had that bear market, it really made it go below that IPO opening price and go to like $7. So I got a bunch here when it was like $7, $6, $7, $8, $9. Then when I started seeing this nice little cause, you can call it a cause. So you kind of see this. So you kind of see this being built here. So when it started going up above this cause and go back down in May, it was around $20, right? That was when I was started coming here to stream, and I started and going on panel and being like, well, my best pick would be Palantir. Probably Palantir, Palantir, Palantir. Always buy Palantir. And so during the summer it started going up right into 28, and then it had this earnings. I guess it was because of earnings. Oh no, it was just before earnings. People were dumping it before the earnings, and when it had earnings it recovered. I forgot what was the news that made it drop before earnings. Probably some scam. You know how it is? It's like just before earnings gets released, somebody is like trying to push the stock down artificially to get in. They tried. So the funny thing is, like, that's why I don't follow the news. Like, fuck the news. Look at that. It's just a lie. So whoever was buying here panicked out, and then when it dropped, it was like it went all the way down to nearly the top of this cause. You see, this 20 level was so important. It was like it got close to 20 in 2023 of July, 2023 November, and then it bounced down there in April 2024, and then it does one last move where it goes back down to there in August of 2024, and it probably tricked people there, and people probably were like so stupid and started getting out. And I think this was when HB saw this. He was like, whoa, it's a 20, buy, and he just went crazy and started buying a bunch of it. And guess what? After that, earnings, boom, we went to heaven, baby. We finally got out of 20 land. Oh, now it's like 125 land. Okay. There you go. There you go, man. Fuck, dude. So the other nice stock that I kind of liked was TMC. TMC is like the underwater mining company, and it's a penny stock though, so I don't like recommending this one. It's a risk. I hate penny stocks. But I was thinking like, well, Trump is all about buying metals and all that stuff. It's not rare earth at all, but it's in the same area of inquiry, right? You kind of have to look at it and go like, well, America wants resources, and if it has to go under the sea and get it, why not? Some idiot is probably going to make some article somewhere, pump this crap up with Trump, and that's what happened. It was just like somebody somewhere in 2025 started talking about it in relationship with Trump. They got new board members or something, and they said like, oh, this new board member is going to do something, or I don't know, whatever. But all of a sudden it just went from a low in December 2024 of 0.7, and it just went all the way up into July 2025 at $7. It was crazy. I was just like, what the fuck? I should have just bought more. Man, Jesus, right? So this would have been like 900%. Oh fuck, man. 1,000 maybe if I actually timed the top and bottom, which no, yeah, I didn't do that. But let's say I was like, if I just bought a ton, I would have got like at least maybe if I sold around here, most likely this is what would have happened. I would have bought a ton here in January, okay, and would have got out when it probably got up to here, when it did this last leg up in 410%. Yeah, 410%, man. Fuck, man. Anyway. Oh well. But that's the world of penny stocks. It's just pure gambling. So I don't tend to like recommending these things, but when you see a chart like that and you see like everything aligned with the narratives, you kind of go like, well, if I picked any penny stock, if I had to pick any penny stock, I would just pick this one. So this was one I mentioned a lot last year, and it was right too. So that one played out. And there's a lot of other these speculative stocks, but I don't play them. You got marijuana, you got all this other stuff. I talk about them a bit, but I I'm not gonna be the one to tell you like, hell yeah, I know for sure this one's gonna make it or what thing. The only thing with the two main ones was like Palantir and TMC, and I think both of those, yeah, you had a chance of making real good gains, and both of them had pretty similar, nice, large, fat returns. You know, so yeah, real good, real nice returns. Now we're entering 2026. We gotta find new ones. We gotta find new ones to look at. So I gotta wait for the first 3 months here of the quarter, and we'll do it. I mean, not the quarter of the year, the first 3 months of the year, the first quarter, and we'll see it. Okay. All right. So let's see if I can get through any more of my articles. I had a whole bunch to go through. But I think I have an hour left before Ruby starts streaming. Because I really want to know if Ruby got a baby from D-Dog. D-Dog. Oh, yeah. So if marijuana, let's see. Okay, so somebody in here is interested in marijuana right here. All right. So if we want to look at marijuana, so this is the ETF I use. I'm not going to tell you about any specific marijuana over-the-counter penny stock. I just use the ETF. It's much easier to use. I don't really care about which company does well. I just put them in a basket, no brainer. So if you look at this chart, okay, guys, let's see what's up. See what's up with this. Okay, you see a bottom here, right? April of this year, you went up with the stock market but failed. So this is one of the areas that you would have not made much money on if you just bought it from April, it went up, and then you just sold it right back to the guy who sold it to you at June, and then after that it just went back up again. So for the most part, yeah, it's not really easy to call this one, right? But here, you got two bottoms. You made your double bottom here. And then you finally started moving up again, and you break out of the top here. Okay, you made your base. Good base. So once you see this, you make another return right here at that level. And so $3. So you have a lower base at 2. You have a second base at 3. And what you doing here now? Okay. Well, I see this. Well, so do I wait for 3, buy it, and then see if it can break 6? I don't know, maybe. So I would just probably say, okay, MSOS. So that's the ETF. Maybe I'll wait for 3 and I'll buy and gamble on that. I don't know. This is all penny stocks, okay? This is a penny stock. This is an ETF, a collection of penny stocks. This is all US based cannabis penny stocks. I don't know. Maybe I'll try it at 3. Okay, I've done this already. I've done this one already. Like I mean, like I usually, if I play this, I usually trade it like this with the MSOX. So MSOX is like the 2x leverage, I think. So let's say I bought it here, right? This would have been a great time for you to try buying right here to here. So that's 250%. Right, you do this one, so you probably sell around here, so probably that. And then with the way it is now, I'll okay, give it some time. I don't like the look of this thing. It's just like, ugh, this thing's not clear at all the way it's doing. Yeah, this is ugly. This is too ugly. So let's look at the weekly chart. Is this any better? Ugh, yeah, this thing. Okay, yeah, this is too ugly. This is not the right look, man. Nah, bro. So if it goes back to 3, I'll look at it again. But otherwise, yeah, it's not at the right. It's not looking at the right way for me to say like, oh yeah, for sure, hell yeah, easy. Nah, this ain't right. This ain't right. This ain't looking right. Sorry, but. Okay, yeah, I'll look at it again when it hits 3 again, if it ever hits 3. I mean, it just might just shoot up again to 7 and 8 and trick people to buy here and then crash down to 3, right? If it does that, if it goes up to 8, crashes down to 3, okay, then I'll look again for sure. I'll look again. All right, then I'll look at it. But right, the way it's looking now, no, hell no. This ain't the right look. This ain't the right look. Okay, what other pieces of this right? Oh, this is another favorite one of mine. Hymns was so good in 2024 though, but in 2025 it really did nothing. It had too many issues with what was it had issues with like Eli Lilly, the competition with Ozempic and all. Oh man, and then they had the whole like if Trump was gonna expand like Obamacare or kill Obamacare. That whole yeah. After that, it just nah. This thing ain't going nowhere because so you see in April it recovered. So April it did this right. So if you bought hymns, this is what I did right. I bought some hymns again when it hit 25, and then when it started going back up towards 68, the previous high, it started doing this right. It just goes up, fails, goes up, fails. Then I got out. That's over. You do this, you go here to the moving average, go to 50. You're done, dude. You got this huge red bar here, and then you're just like, after earnings, this was earnings too, right? And it's just like, no, it's over. It's over. Sorry, we're not going to get to 80. Whoever was like hyping this stock up to 80 or whatever is like a moron. It was just like, dude, everybody's talking about this stock now, man. I was in this stock when nobody was talking about it. Like now everyone's talking. Oh hell no, I'm out. I'm out. This is a dumb thing. So if you ask me, well, what do you think of it now? No good. Like the whole chart is collapsing. It's probably going to bounce to like 40, if at all. If it's lucky, maybe it might do it, but most likely it's just going to fall apart and go below 24 this time. And if I actually care about this, getting back into this stock, it'll probably at the end of this year. So this is worthless. Yeah, this is worthless, man. It's done. It's done. This one's done. This one's cooked. Okay, that's it, as the Zoomers would say. All right. Anything else? Nope. I think that gives you an idea. Okay. Okay. That's. All right. CDs are shit. You can tie up 70K for 18 months to make the 3Ks. Yeah, CDs are shit. Yeah. That's boomer investment. I mean, you just just go to the money market. Just go to money market, like you said, right? So. Okay. Let's go look back here. Anything else? No, yeah, you can look this up yourself, guys. This one's I already gave you. Let's see what else. Okay, let's talk about the global liquidity cycle. This is another thing you got to worry about. Okay, let me introduce it to you guys. This reports look at the origins, definitions, and outlook of global liquidity. So this is an important thing you have to know about the central banks. Are the central banks printing money or not? This is the question we must ask ourselves. The earliest things you learn often stay with you. Our key insight came from the bond markets and specifically how the U.S. Treasury yield curve reacts to the cycle of funding liquidity. We learned this decades ago at Salomon Brothers, and it stuck. More liquidity induces steeper yield curve, less liquidity meaning a flattening curve. The latest steepening of the yield curve confirms that U.S. liquidity has been improving for some months. So this was written in 2023, all right, guys? So this is old article that I'm just pulling out here to give you an explanation of what a global liquidity cycle is, okay? Because this is a cycle you need to pay attention to. Evidence the chart below, all right, where our index of U.S. liquidity has been advanced by 9 months to show that it is predictive. It filled the coffers of Salomon's traders, but for years we puzzled over why this linkage should exist. So what this means is that the orange curve here is pushed forward 9 months, and it aligns with this yield curve. Okay, so that's what the first paragraph was. And I'm not going to explain to you what a yield curve is and all that. You got to go look back at my old videos. The best explanation relies on term premia, the compensation paid to investors for holding interest rate risk. Term premia are a main factor driving the slope of the curve. The efficient market hypothesis tells us that term premia should be negligible over the long term. Huh. So, efficient market hypothesis, I also explained in my videos before, which is what the intelligent investor, if you look at that book, The Intelligent Investor, that's what it's about. It says, like, don't bother trading the market. Trading is stupid, fool's errand. It's random walk. It's all noise. It's unpredictable, whatever. Okay, that's what efficient market hypothesis means. So if you believe in that, if you believe that the market is efficient and that there shouldn't exist any discrepancies in how the market prices in stocks, bonds, gold, silver, then this term premia should be negligible. However, they fluctuate over most investment horizons. Since year 2000, some 80% of the variation in 10-year treasury yields can be related to term premia movements. Oh, according to the ACM bond data provided by the New York Fed. One reason term premia vary is because they reflect the excess demand and supply for treasuries. Oh, wait. So demand and supply are not in sync? Oh. Can I take advantage of this information? Oh, probably, right? Well, let's continue. In periods where there is excess supply of treasuries, term premia are typically high and positive. In periods of excess demand, they tend to be low or negative. Treasuries are often held by banks, insurance funds, and major investors because they are deemed to be safe assets by many regulators. In other words, they are liquid and their prices should be largely predictable. Why are term premia linked to liquidity? During periods of tight liquidity, when systemic risks are high and defaults more frequent, the demand for safe asset increases and term premia tend to fall. Equivalently, during periods of abundant liquidity, the reverse occurs, and investors switch out of safe assets into more risky investments such as equities, stocks, and corporate bonds. Oh, well, Apple bonds pay about like 8%, right? Good ones. So that's nice to get 8%. Much better than a market fund, a money market fund. Anyway, hence, using rising liquidity is associated with increasing term premia. Because term premia have greatest impact at longer duration bond tenors, this explains why the yield curve steepens. The term premium on a 3-month bill is negligible. Admittedly, this description runs counter to the traditional QE quantitative easing narrative, which argues that central bank bond purchases push down yields by bidding up prices and so reducing term premia. Okay. This argument relies on increasing scarcity of treasuries available for the private sector. It is hard to argue against this as a fact in the short term. However, beyond a window of days or weeks, the evidence runs much the other way. This is because what is ignored is the second round impact of rising central bank liquidity. Injections. Okay, this is like a booster shot. The corollary of EQE purchases on the private sector's demand for safe assets. More system-wide liquidity reduces the attractions of safe assets. In short, the demand curve for safe assets shifts leftwards, causing treasury bond prices to fall and yields and term premia to rise. Okay, so this is the summary of this is that the central banks, you guys have make memes about money printer go burr and all that stuff. Well, that's where all that stuff comes from. All right. So I'm not going to go any deeper into that. This gets more mathematical here, but the gist of it is this thing: we want to time this cycle. We want to figure out when is the big top and the big bottom, the real big ones. Okay, so let's time it. The cycle of global liquidity is shown in the following chart. Global liquidity is measured here as a normalized index, the GLI, which essentially captures its momentum. We use it to facilitate comparisons over time and between countries. The index is designed to have a 0 to 100 range with a mean set at 50. The data reported in the chart have been plotted alongside a repeating cycle or sine wave of average duration 65 months, between 5 to 6 years. This frequency was originally estimated over the 1965 to 2000 period using Fourier analysis. Fourier analysis is named after a French dude who, well, I'm not going to get into it. All right, you guys can look it up. Fourier, Fourier. All right. It has been extrapolated thereafter. The coincidence of the two cycles, the GOI and the sine wave, not only confirms or not the accuracy of our estimate of the cycle length, it also allows us to project the cycle forward in time to predict the next peaks and troughs. So if you look back here, and you saw this stuff here. So this is the cycle analyzer, and you can look at the foundation of the study of cycles. Look them up. Let me see. Let me get you yeah, you can. I mentioned them many times before already. Here you go. There you go. So you guys can look it up here. Okay, that's the link to the financial foundation of the study of cycles. So these guys look at cycles. They do the Fourier analysis. They do all that stuff for you in software. And this is the software. And I can just do this myself. So I got that GLI data. I downloaded it into my Excel, and then I upload it into this thing. And then I do this cycle work here. And this one is a daily cycle, so this is short term. So what the article is going to do is talk about this long-term cycle. Okay, so this cycle is pretty stable. We don't need to use fancy software to track it every day. It's pointless. It's going to look like this. So for all time, it's going to look like this. Okay, hold on. Yeah. So it's just going to look like this, and I'm going to zoom it in, and you could just get this sine wave and plot it over this thing, and it will just continue up and down over the years. So I don't need to do any fancy software like this stuff. Here, I'm doing it like every day, okay? I'm tracking it every day, pretty much. I can track the liquidity every day. And so what I'm doing here is I'm going to try to track the short-term fluctuations in the cycle, okay, of the liquidity here, of the GLI, all right? That's what I'm doing right there. And this one is just a long-term cycle. So this one is plotted over many years. And so we got this one from 1968. They got data from 1968 to 2026, which we are going to approach. And guess what? The top of this cycle, the central bank money printing go burr, is going to hit us this year. Now, is this going to happen? Are we going to have a crash? Man, well. You know what? It could be, right? We could be. But do you know that Donald Trump is going to replace Jerome Powell in May? So what if this new guy is going to go even crazier, and he's just going to say, F everything. We're just going to money print like crazy. You know what? Everyone's expecting it to crash this year. And what's going to happen is that they're going to bet wrong. Everyone's short. And then all of a sudden, this new guy starts going crazy on the money printer and print everything like wild. And then it's just going to go up even higher. And so the whole S&P is just going to go insane. into 2027. And if it does that, then bro, bro, it's going to be delayed again until 2027. So this chart, this cycle, it could be something like this. Like you see in the 2000s here. So when we had the dot-com crash and then all of a sudden this thing spiked up against the cycle, it's like, they were trying to prop up the stock market during the Bush administration for a while. They kept that thing going back up real quick, and it was just like, oh man, got to keep the stock market stable. Oh man, oh man, oh man. And then what it did was create a bigger crash in, guess what? We got the 2008, right? So, I don't know, man. I think for me, it's like I definitely will have to consider all these things now, especially in light of this cycle here, the Brenner cycle. So let me read this. How the Brenner cycle predicts 100 plus years of stock market movement. This one's a great one. Samuel Brenner was a farmer from the 1800s who wanted to understand how stock market cycles worked. In 1875, he published a book forecasting business and commodity prices. He identified years of panic, years of good times, and years of hard times. So the panic years, these years are when the market panicked, either buying or selling a stock irrationally until its price skyrocketed or plummeted beyond anyone's wildest expectations. So, okay, so this is a high volatility year. Good times. Good times are the times when we had high prices and it was a great point to just sell stuff, okay? And the hard times are the years when it was a great time to buy the dips here and everything was at the low prices, okay? So this is a longer term crazy chart and people love using this one. Let me see if I can zoom in. Yeah, there we go. I mentioned this before too, but it's always good to look at it again. So let's see. When's the next hard times? The next hard times is 2032. 2032. Okay. And let me get rid of this. Okay. And let's see what is the good times. Good times is 2026. It's the time to sell. Damn, man. 2026. Everything points at 2026, bro. But I wonder if it's going to fake out, man, and push and delay it until 2027. So you got the Hindenburg Omen. You got the Global Liquidity Index. You got this Brenner cycle. All these things point at 2026. But I have a feeling, bro, it's not going to happen in 2026, huh? We're going to fake out again, bro. Yeah. So anyway, yeah. So Eric W. Yeah, it's May. May is going to be the replacement day for Powell. So let me see. And they're already looking at candidates for his replacement. People are going into interviews already. I don't know who the next guy will be, but there's a whole bunch of people lined up trying to get the job here. So let's see. Federal Reserve replacement. Let's see. Damn, 6 days ago, Trump threatens to sue the Jerome Powell. What the fuck? What is he trying to sue him for? Oh my god. Anyway, yeah, he's trying to sue him. Are you guys for real? So Eric W says, yeah, he's gonna pump before midterms. Exactly, So the people, they, midterm years are usually when they kick out all the incumbents, right, of the dominant party in Congress. So years are so important, and he could do that. He could just make this new guy go in there and already tell him, once you get in there, you do as I say, which is pump, 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 and it's gonna pump all the way into 2027, and then we're gonna have a crash. Okay, so yeah, it's gonna be funny. I think it's gonna be real funny if that happens. Anyhow, let me see if I can find it, like what it is. he's gonna announce the new replacement sometime this month. Yeah, okay. But I don't think he can really replace him till May, right? I think it's May. Yeah, it has to be in May. Jerome Powell's term ends in May. That's right. So May is the time. Okay. So okay, he's got till May. And let's see. So that means his last FOMC meeting will be around April. So April 29th will be the last time you'll see Jerome Powell talk in the podium. Okay, so after that, you're gonna have a new dude. You're gonna have a new dude come in. So that's it. That's it, baby. That's the end of that. That's really the end of that. So let's see what else I can get through. I'm not gonna get through everything I wanted to, but let's try to do as much. So I got the global liquidity cycle. Okay, I got that. So let's continue on. So this is the daily chart, and I'm doing a more precise look at like how it's gonna move next year. Like the big chart is, it's just like you don't exactly know when in 2026 it will happen, so it's not really good to use it as a precise timing tool. You just know sometime around 2026. But since we know that May is going to be a pump, let's see how this smaller cycle analysis will fare. So if I use this analysis here, then this thing tells me the top two cycles are 300 days and 200 days. And we're going to get the money printer is still working into May. It'll pause a bit and then shoot up again into November before stopping in 2027. So maybe this is right. Maybe this thing will tell us that from August 2026 to the end of the year, that's when we'll get the most money injected into the system. Will be the time to really expect a huge market rally. So sometime from July, August into the end of the year, the market will just go up like mad. So that makes sense into elections, right? So once you get to the midterms, they want the markets to be really acting well. This will be the best time to go long. So sometime from July into December next this year, the new year, and then after that expect a big drop off. Okay, so yeah, maybe it's delayed until 2027, man. So we'll see. Okay, what do you think about Palantir? No, Palantir, I already told you guys, like, short it. I don't know, man, whatever, like, wait. Yeah, it's over, man, we're done. Short it for now. I'll come back to it later. I don't know if I'm gonna get back into it, so yeah, we'll see. Yeah. So yeah, go back and you see my analysis for Micron and Nvidia and all that. I talked about the cycle of Nvidia. Yeah, so I don't know how low it will really go, but I'll do that next stream again. I'll try to tell you guys what's up, because if I do that, I'll have to use these charts here, the mark indicator charts, like this one. So I'm looking at silver over gold on this chart, and I think next week we should see some kind of peak in the silver to gold ratio. And the reason you look at the silver and gold ratios, because this thing really determines how strongly, you can expect how gold will do in the coming year. Because I think in this year gold is going to stay flat to down, so I would be getting out. I would definitely be getting out. XAU. Oh yeah, here it is. The Philadelphia's gold silver index here. Man. Okay, maybe a couple more weeks, huh? Let's see. Yeah. Maybe a couple more weeks, and then I'll think about if I want to short silver too. Micron, yeah, same time with Micron. It's over. This move is over. Yeah, for silver, gold, miner stocks. Yeah, we're done here. We're definitely done. So I'll talk about gold and silver mining stock next time, next stream. If you're still in gold mine and silver mining stocks, you probably want to sell it, man. I think we're at the top for sure. So because usually the mining stocks, they'll start dropping earlier before the actual silver and gold, or well, not really. Sometimes silver will go so crazy that yeah, I don't play these things too often, so I'm not. The boomers like to track them more carefully than I would, but I think we're done here because if I look at the cycles, so if I look at the cycle ones, they agreed. It's like we're done. We're done. We should be top now for gold and mining stocks, gold, silver mining stocks. Yeah. Oh man, that's the wrong symbol name. Okay, I think it's XAU, not AUX. XAU. Weekly, not the daily too. Yeah. Okay. Hold on. Fuck. Here we go. Yeah, you see this? So this is the weekly cycle. Bruh, so 244 week cycle. Bruh, we're at the top, man. F that. Yeah, man, this is bad. so these stocks might actually keep dropping earlier before silver and gold actually like presents itself as a top, you know? So if I see next week all the gold and silver mining stocks start dropping, then I'm really certain that like, oh shoot, like silver might collapse in the week after or something. Shit. Yeah. Well, yeah. So, and if you can time that really well, that's great. I'm not a futures silver trader or anything. Boomers love that stuff. Like if they really just it's like, oh yeah, I get the exact top of silver. Oh man, you make so much money. You're just like, fuck yeah. But anyway, you gotta talk to a boomer, a real boomer. I'm not a real boomer. I'm a fake boomer. Yeah, fake boomer. Okay, let's go back to the business cycle here. Let's go back. Sector rotation analysis. Okay. So you remember at the beginning stream, I was doing the semiconductor over NASDAQ ratio. Well, let's just go back and do this type of thing here, and discuss the business cycle and how stocks, bonds, commodities. So the graph below shows the idealized business cycle and the intermarket relationships. So what I did when I showed you guys the semiconductors to the broader tech market, the NASDAQ, it was an intermarket relationship. I was doing a relationship between semiconductors and the rest of tech. Okay, so the rest of the tech is essentially biotech. You have what else you got now? You got stupid tons of AI software companies that have been created, and then you have the cloud guys like Oracle. Actually Oracle did so bad recently. It's so volatile. Oracle is such a crazy like earnings reports. Like every time it has an earnings report, it jumps up 30-20%, or it has a bad one, it drops 20-30%. You're just like, what is wrong with that? What is wrong with Wall Street? Like, can these people not analyze Oracle correctly or something? So a lot of the reasons we had such a hard time last quarter was because Oracle said like it had a ton of new customers and growth. And then the next earnings, it says like, no, there's rumors coming out that Oracle doesn't have that many customers or future customers. And then the whole semiconductors just went, bleh. It just threw up. And then it just like caught up again when like they said like, no, there's no, it's like, fuck this. Oh, you guys are crazy. You guys can't figure out what Oracle is doing. And for some reason, Oracle, like, also really affected the movements of semiconductors so badly. It was crazy. And it's probably because, like, Oracle, Broadcom were the only two major tech earnings left in during the Thanksgiving period, right? So most people they've already reported earnings like well before Thanksgiving. So after Thanksgiving, there's only a few left because like Nvidia reports already, right? Like just before Thanksgiving. Then after Thanksgiving, a lot of people they're not paying attention to the markets anymore. They're like, oh, we're done now. Okay, we already know what Nvidia is gonna do. So who cares what Oracle, Broadcom, or Micron are really gonna do? Or any of those three gonna F it up? But yeah, they did. So Oracle F'd it up. Then Broadcom came out and earnings came out, and it was like, okay, we're doing great too, but it wasn't enough to like fix the Oracle issue because Oracle really did damage, and like Broadcom didn't help it enough, and the semiconductor kept going down again, and then until Micron did earnings the week after, and we kind of had a recovery. But like you can see, like only Micron like did well in the past week. Most other semiconductor companies, eh, they just recovered what they lost because of Oracle. So weird, man. It's like everything was tied to Oracle. Why? Made no sense. But whatever. Who cares? Let's do this business cycle thing. The graph below shows the idealized business cycle and the intermarket relationships during a normal inflationary environment. The cycle map is based on one shown in the intermarket review by Martin J. Pring. The business cycle is shown as a sine wave. The first three stages are part of an economic contraction, weakening, bottoming, strengthening. Okay, stage 3 shows the economy in a contraction phase, and as a sine crosses the center line, the economy moves from contraction to 3 phases, expansion. Stage 3 shows the economy in an expansion phase, starting to weaken after the top. Blah 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 blah. Okay, so what this means is that you can idealize the business cycle as a sine wave like this, which is not true. Business cycles are not this perfect, but let's assume it is. We have the stages when things start going bad. So when things start going bad, bonds go up, stocks and commodities go down. So stocks and copper, stuff like that. Lead, not lead. I mean nickel, stuff like that. Silver goes down. Then we have the bottom of the contraction phase of stage 2. Commodities is still going down, but then stocks and bonds go up together again. So this is when you know it's a bottom. When bonds and stocks start going up together, it's like, okay, well, stocks probably stopped going down. Then we finally found a bottom. And then this is the early beginnings of the recovery, right? We get everything start going up. Commodities, stocks, and bonds. All three start going up. Then we hit stage 4, the end of the expansion phase right here. The end of the big move up is when bonds start going down and commodities and stocks still go up. And then we hit the peak. We're hitting the peak, the topping area, where stocks and bonds go down, but silver and copper are still going up. So when you have the end of a big business cycle, this is what you should see. You should see oil, silver go up, and stocks and bonds go down. So you should see this strange movement of that case. And then everything starts going back down, and that's it. That's stage 6. That's the end, right? Okay, of the business cycle. So if you want to really know where the top is, you should see those things. You should see bonds and stocks go down while commodities go up. And so we've got to look at oil, okay? We've got to look at silver, look at copper. What else is there? Okay. Now, let's look at sector rotation. This is where it matters for stock people. Guess what? The business cycle doesn't line up with the stock cycle. The stocks actually top before the actual top of the real business cycle. So when the stock market is peaking, everything's still doing okay in the ground level, in Main Street. You shouldn't feel anything different. So if the stock market starts dropping, but you're still feeling good, well, that's because it hasn't gotten to you yet. That's the problem. And in this case, when we're at the top, you should see energy going up. So oil stocks for sure were going up because oil should still be going up at this peaking area. Materials, right? You have lithium, gold, copper, silver. And then we start seeing consumer staples. Consumer staples. So what is consumer staples? Dollar Tree, Dollar General, Walmart. If you start seeing Dollar Tree, Dollar General, Walmart doing better than Target, right? Or Lululemon, well, yeah, we're going to see some issues here, right? People ain't going to Lululemon stores, that's for sure, if things are starting to look bad. So we're at the early stages of like, wait a minute, things aren't going so well. So usually like the top earners, like the people at the top 10% of the world economy, they don't feel shit. It's always the bottom guys that start feeling shit, right? The people at the Walmart, Dollar Tree, Dollar General level, the people that are renting from John Galt's properties, those guys are feeling shit first. So that's why you start seeing, wait a minute, why is Dollar Tree and Dollar General stock doing really well? That's the problem. That's the problem. Okay. So I like looking at Lululemon, Target, definitely those two, you look at, you go like, well, is this outperforming the broader market? So let's look back again at our relationships, okay? Okay, and let's look at the ratios here. So this is discretionary consumption. So consumer discretionary versus consumer staples, XLY over XLP. So if XLY, the discretionary, is doing better than the staples, okay, then so Hormel, Chili, Tyson, right, Colgate, they're doing a lot better than Tesla. Then this is the issue. This is the issue, right? We're going like, okay, market's doing well. Discretionary is doing better than staples. But here you see everything went down in January of last year. It started moving down, 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 down. So let me overlay it with the S&P 500. Let me overlay it. Let's see. New price scale. So this thing already started dropping well before the rest of the market really dropped. Okay, this thing was weakening. So where are we at here? I don't know. It's definitely looking weak, but it doesn't really help me too much because it doesn't tell me enough ahead of time if there's an issue, right? I don't get a good feeling about how well this is telling me stuff. Now, there's sometimes when it does tell me ahead of time pretty well. Like here. This point was doing really nicely. Okay? Because at this point the market was dropping here. I mean, not dropping. I mean, the indicator was dropping. The relationship, the XLY over XLP was dropping. And the market made a nice new high into New Year's. And then the market started dropping. So in this case, I had an early 1 month signal before the market top in 2022, before the 2022 bear market. As far as we're seeing here, there's not really very, very nice, because like this thing, yeah, it made a top, but it doesn't pop out into my face. And I say like, yeah, I know this is going to be a real bad turn right now. So what should I do? How should I fix this indicator. Well, I have another indicator for you. I got this one. Oh, this is more eye-popping. So what did I do? How did I fix this? So what I did was I used the equal weight staples, discretionary over staples indicator. And what this did is removed the mega cap stocks. I removed Tesla. I removed Walmart because Walmart and Tesla are kind of like they're too big, so they're not sensitive enough. I'm gonna leave the Dollar Tree. I'm gonna leave like the shitty stuff, but I'm gonna remove Tesla and Walmart from the equation because Tesla kind of moves up and down independent of how like certain things is. It's like, oh, Elon tweets, oh my god, or this and that. No, no, no. And then Walmart is too stable, right? Everyone goes and goes into Walmart, even when it's good times, bad times. It's Walmart is not really a good staples like indicator. Dollar Tree and Dollar General are much better because they're all in the hood. You don't have like a bunch of like Walmart neighborhood stores that really affect or change how people consume. Okay. It's really Dollar Tree and Dollar General. So I remove all that. So now you see, look at this huge red candle of this indicator in February 18th. So this was before all the Trump stuff, we were starting to hear more about Trump later, but this was like early days. It was like, what the fuck? What happened here? What happened there was earnings. Earnings happened there. So it was really earnings that messed up this relationship before Trump like really messed it up in March. Okay? So you got some Trump stuff happening in the week of February 24th, but it's really earnings really killed things in the market. But if you just look at just this indicator, you would know, right? You would be like, hey, the stock market's doing okay. It's not really dropping that badly. Why don't I just keep holding? Nah, man. Nah, if you saw this big red candle, 6% drop in the ratio, you would have been like, that's the top. That was the top, bro. And it's a nasty top too, because this candle tells you that there's going to be more pain to come, a lot more pain. And guess what? We went down into April. So I'm waiting for this to happen again. I need to see a nice, fat, big red candle like this one here. So this thing really trapped a lot of people in October. We had that October drop, People really were thinking like that was it. That was the top, but it was a fake out. It really was a fake out here, man. Because if you look at the semiconductor one ratio, you see this? Yeah, but semiconductors didn't do much damage to semiconductors, Semiconductors was the one that was carrying the whole S&P 500, NASDAQ 100 and all that stuff. So even though I see this big red candle here, it's like, no. If you look at both of them together, they cancel each other out. So what you want to see is a big red candle here, big red candle in the mega cap one, okay, version of this, and you want to see semiconductors go down. You don't want to see this green. If I see this green, this cancels that out. I want to see red, red, red. All three of those go red. If all three of those go red, then I know something's up. All right, so that's what you want to watch. All right. Anyway, that's good summary. Okay, yeah, Ruby's gonna go stream in about 10, 12 minutes. We gotta find out if she's pregnant. Okay. Let's see what anybody says in chat. Yeah, white chick stocks. That's correct, tropes. Market lost a ton of money with their tranny pushing parade. Oh, okay. I can't say that word anymore. Google TOS. No. I can't say that no more. Okay. Okay, so I got to the business cycle stuff. That's good. We finished that. I told you some indicator stuff. Nice. I'll have to finish up some other time, maybe tomorrow. I don't know. We'll see. But before we go, we should look for something else. What should I talk about next? Covered that. Good. 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 Oh man, I'm losing memory. I'm losing the memory. The RAM. I need more RAM. Oh, the RAM cartel. Oh, the RAM cartel. Oh my god. Let me read some of these articles, actually. Yeah, we got some time. Maybe I can read a few of those. Okay, let me read this one first. Let me read this one. Okay, this is McClellan Financial Publications. So you can look at the description in the video, and you'll find some stuff here. So this is a consumer confidence, right? So U of Michigan consumer confidence is low, which is bullish. So this was written in December 30th last year. The University of Michigan has been conducting its survey of consumers since 1955. The recent data have been among the lowest of their published readings, meaning that survey respondents are not feeling all that great about the supposed 4.3% rate of US GDP growth. Perhaps people are more attuned to indications that, like manufacturing employment, being in a decline since May 2024, and thus far, the low gasoline prices have not gotten any traction in the hearts of consumers. Lows in consumer sentiment measures trends to be bad for whoever is in the White House, and to some extent, this applies to Congress as well. The UMich survey data reached what was then an all-time low in 1980, which doomed Jimmy Carter's re-election chances and led to Ronald Reagan's victory. A similar low reading in 2008 saw a change from Republican control under Bush 43 to President Obama in a decisive popular vote and electoral college victory. There was another very low reading in 2022, which led to a change in Congress and eventually to Donald Trump winning another term in 2024, even though the survey numbers had recovered some by the time of that election. So, the Republicans currently in control of the White House and both houses of Congress will want to see these consumer sentiment numbers start to rebound. That is the point for politicians to worry about. The point for investors to worry about is that as consumer confidence numbers start to rebound from very low levels like this, it tends to be extremely bullish for the stock market. Usually, that rebound occurs from a simultaneous low in stock prices along with the consumer sentiment data. It is a rather unusual condition to see extremely low survey readings like this happening with stock prices at new all-time highs. Well, that's interesting, isn't it? Part of the reason why low consumer sentiment are bullish is that such readings usually arise from a condition of seeing a bad economy, which the Federal Reserve then steps in to do something about. We have had 3 rate cuts in 2025, and now the Fed has started up QE5, although they are not calling it that yet. Those are bullish conditions for both the stock market and the actual economy. It should lead to a rebound in the consumer confidence data, and that should help keep the bull market going. So, this is another reason I think 2026 is not going to be the time to be heavily short, because I think this is what's going to happen. The Fed is going to pump. So you saw all that, right? All those paragraphs talking about politics. And then at the end, it says like the Fed is reintroducing QE. What does that mean? Did they say anything about QE restarting again? What's that about? What's that about? Well, this is the problem, because people aren't really sure if they actually said that. Let's read this article here. The Fed just made an overlooked decision that's even more important than its last rate cut. Well, what was that decision? The most important part of the Fed's last policy meeting is something that may have been overshadowed. Yeah. The central bank's decision to start reserve management purchases. Oh, what is this? What is reserve management? Oh my God. Did they just say QE without saying QE? Are these guys just rewrapping something else and calling it something else because they don't want to say it's QE? Oh no. Oh no. So a mouthful that essentially boils down to the Fed expanding its balance sheet by purchasing short-term US Treasuries. Oh man, sounds like QE. That's the money printer, right? Changes to the Fed's balance sheet often fly under the radar for many investors. Yeah, no shit. Most people are morons who primarily trade based on rate cuts and expectations for the path of monetary policy. Yet the central bank's bond purchase programs have historically been an important tool for both influencing interest rates as well as providing liquidity to markets. The announcement of a new bond buying initiative was likely one of the most important details of last week's meeting, according to Stephen Blitz, a managing director and chief U.S. economist at TS Lombard. The Fed cut and said, "That's all, folks," until the data rolled in. But that was no surprise and far less important than the signaling from the return of balance sheet purchases. Oh, man. Oh, no. QE is back. Well, so is it QE or not QE? I don't know. There's all these articles here. Like this is like from Wolf Street. They say like, oh, why it's not QE? No, and people are saying like, yeah, it's QE. Oh, there's so many blogs out there talking about this crap. Look, I'm not a monetary policy expert. I'm not a I'm not gonna like second guess what the heck is going on here. But what this does tell me is that you should pay attention to certain things. One of the things is this. It's called the reverse repo chart. Okay, and this thing tracks the New York Fed repo and reverse repo operations. Okay, all this stuff. And what's important is that you see this big blob of blue. You see this huge blob here. So what are we looking at? What is this crap? Let me simplify it for you guys. I think I talked about this in more detail in some way back stream I did, but if you see this huge blob of blue coming up, then you should think of it as like I'm going to put money in the Fed bank instead of in the stock market. So the banks themselves, if they have a lot of free money, they'll buy Bitcoin, they'll buy Ethereum, they'll buy stocks, they'll buy something else. They'd rather buy something else. But if the Fed is more like encouraging of putting money, it's just like, well, if banks feel like it's much safer to park their money in the big piggy bank, and the big piggy bank is the Federal Reserve, then they'll do so. So if they feel like stocks and bonds and other things outside in the open market, crypto, are more risky, then why should they do it? They rather leave their own money in their own bank. So the banks themselves have a bank. The banks will put their money in their own bank, and it's called the Federal Reserve. So they'll just leave it there. And this thing is just a chart showing the piggy bank growing. That means they're less likely to use that money to buy other stuff. So they park their money. They park more of their money. They park more of their money. More of their money is being parked here. And then something happened. Something happened in 2023 where they said, wait a minute, the risk is improving. Let me take my money out of the piggy bank. Let me take my money out of the piggy bank. Well, guess what? After 2023, we had our last bottom, didn't we? That's it. We had our last bottom. So this is why we have an issue here, because if we look at since September 2025, they haven't put their money back in here yet. There's less liquidity left. So that means if you want to see the stock market go up more, you need to see some money. So unless the Federal Reserve starts pumping more money, then the banks themselves aren't going to buy stocks. The banks already put all their money in stocks. So who's going to buy at the S&P 500 at a higher price? If the banks are out of money, then who's left? Only the money printer guy is left, right? Only the Federal Reserve is left. So there's no money left over. So this is what this is telling me, is that there's nothing left in the piggy bank to do it. So you got to wait for the next Federal Reserve chief. So whoever Trump is going to pick is going to pump everything back up again then, because the banks themselves are out of money. We're totally out of money. Okay, they already spent it all to pump the market up to where it is right now. That's it. We're done. So that's another evidence of like why it's hard to see the market go up without some external interference. So anybody hoping for a crash would have to assume that the Federal Reserve isn't coming in to save their asses. And that's probably not a good bet to make, because the Fed will come in and pump the market again. So if there's any kind of crash going into this year, it's going to be very brief, very short, kind of like what we had last year. It was just going to be a 2-month, 3-month bear market correction, and then we go back up again. Okay, so that's it. That's what I would expect. No guarantees. My predictions are going to be true, but that's what it looks like to me. I gave you all my evidence. Everything I gave you all my evidence. Okay, guys, we got a Ruby stream in 2 minutes. Okay, Celebrity Sundays. Go to Ruby's. Go see if D-Dog made her pregnant. I have no clue. This is crazy stuff. And yeah, support the show, you know. So I have the Cash Apps on the description. So you can go there if you want to give like people Cash Apps, like John or me or whatever. It's like as a token of appreciation. You know, I don't need the money. Also, I have Porsche's Cash App there and PayPal there. I don't know if they both still work, but you know, this show was started by a lot of help came from Portia. So even though she's not on the show anymore, you know, her spirit lives on in this show. So a lot of this work was done by her as well. So she helped a lot in the background. And we'll continue on again to discuss these things next time I see you. And hopefully I can do something where I have a Substack where everything's organized in there. And then I have regular schedules where I stream specific times during the week, you know, and then you know when to show up. All right. Otherwise, it's just so hard. But you know, I don't know. I'm just too lazy to keep a regular schedule in that sense. It's been so long since I've actually had a regular job, right? It's so hard to go back to be like, oh, okay, at 10 p.m. I'm gonna have to show up for this or this. Oh God, I hate that so much. You know, if any weakness I got is that I just like waking up and then doing something that I feel like and just doing that. And yeah, Substack. Yeah, because Substack has a lot of features now. They got live streaming feature there too, man. So they're adding features. So I'm liking it. So I'm like, okay, well, I'll get into blogging and things. I should probably get a new laptop or something. I wanted to get a new laptop for Black Friday, but I felt like, I think there's going to be a better refresh in hardware with new Intel chips next this year than last. So I'm holding out. I'm just gonna keep holding out. My laptop right now is so old, but it still performs well. So I'm just gonna keep on holding out. So cheap. I'm so cheap when it comes to that stuff. But it's really because I don't want to reinstall all my stuff again and figure out all my passwords and things. I'm just so lazy when it comes to that. Okay. And so what preview do I have for you guys next time? What are we gonna discuss next time? I think we're gonna discuss probably the performers of, let me see, what is it, the performers of we're gonna discuss some where are these here? Oh, gold mining stocks. Yeah, we're gonna discuss some mining stocks. See, like if you guys wanted to short something, you know, we should probably start looking at that. We should see which ones are the choicest gold and silver mining stocks to short now. We should look at like inflation of other countries. Oh yeah, you see Venezuela, 269.9% inflation. Well, that's why he's gone. You can't have 269.9% inflation and protect and have your people protect your ass from the gangsta United States. You know, the gangsta United States is coming. And yeah, there's plenty of things to talk about. Yeah, terms ends, like, yeah, there's always something to talk about, bro. And there's just so much. Oh man, there's just so much. It's never ending. We could talk about this stuff forever, but you don't need to have too much knowledge. That's what I'm telling you right now. Like, you just know about the Zweig breath thrust and you would have made money. You just need to know about like, Dollar Tree and and Target and figure out how they're doing, and Lululemon, and you can figure out when the business cycle ends. It's just so simple, right? You don't need like big knowledge. Just knowing those simple facts is enough for most people, and you'll do well. You'll do well. You'll know what the top where the top is and the bottom. And we're gonna discuss like what's the Magnificent Seven and all the other stocks here. Like look at something like SoftBank year. It's just like what the heck is all this AI crap? Why are these things like ballooning like a bubble? They're all bubbles, man. And when do I want to short them? That's the problem. When do I want to short them? Because you can make a lot of money when that bubble pops. You just gotta know when. You just can't be like Michael Burry and be like, man, I'm shorting. Like Michael Burry quit, dude. He gave up. He tried to short like all the way since like 2-3 years ago. He said like this is the top. Man, this ain't no top, bro. You know how bubbles act. Bubbles always go a lot higher than you expect them to go. I got no time to deal with that. I want to know when exactly the bubble is. Then I'll think about shorting things. Yeah. Because these things are just going way too good. Let's look at the aggressive sectors. Yeah, look at this, right? Like look at this from 1 year ago. Look, semiconductors up 52%. This is the best performing aggressive sector, outperforming everything else. That's why I said semiconductors. That's when we started the stream. I was like, what sector is the best one? That's it, bro. And what about the last 6 months? Right? 33%. Man, come on. It was so easy to pick that one and just turn off your brain. Because anything else would have been like, it's just a gamble. Because like, yeah, they all would go up, but which one is for sure going to go up the best? And if I had to pick one, it would just been all the time. Just pick semiconductor and just like leverage it up. So that's why I use XOXL. It's 3 times this. So 3 times 33, right? Is practically 100% gain in 6 months. Why not? It's just turn off your brain, bro. Don't make it complicated. Don't need to look at weird charts and all this data. What? I just need to look at Zweig breadth thrust and that's it. And that's what I'm trying to tell you guys. Everybody can do this. No PhD required. No PhD required. Just look what the Fed says, what it does. See how it double talks, and they do double speak, right? You saw them. They said like, is it QE? No, it's not QE. We're calling it reserve management purchases. Bro, that's QE, man. It's a freaking coke fiend asking for a hit. I need a hit. That's it. That's all you need. So, okay, Ruby's channel. Here, I'll put it on the thing. Guys don't know Ruby already? Wow, okay. I don't know. I don't know how many people know about these things of different sectors. Everybody here is from a different sector, huh? So, Ruby's Basic right there. There's your link, guys. She should be streaming now, guys. We should know about if who's the daddy. Hey, what's up? We're gonna end the stream now. Sorry, guy, bro, you didn't make it in time. But anyway, yeah, you can watch it again, and we'll do another live stream some other time. And did you finish? Yeah, I'm finishing up. I'm wrapping up. We're telling everyone to go to Ruby's, right? Ruby is gonna reveal who's the daddy. Who's the daddy? Oh no, sorry. No. Yeah, please rewatch. Yeah. Let me know what's up in the comments. Let me know what you think in the comments. What else you guys want to talk about and stuff. Yeah. We'll definitely go over some individual stocks. That's one of the things I want to do too. We can look at the speculative stocks. Let me see. What are speculative stocks? I just made this new list. I mean, I was already talking about this stuff before, but I put it all in one list for you guys now. Space stocks. Look at this guy, up 200% in the last 6 months. Crazy stuff. Like, and marijuana, right? Some marijuana in there, man. And so these things are gonna be crazy, real crazy, because if the stock market is going to explode in the back half of this year, I am going to watch these because they're probably even going to go even higher. Even higher. All right. Let's see. Yeah, let's see. Which one's the leading one here? Which one's the leading one? Marijuana. It's going back down. Lunar. Some mushroom stock is about to improve. Yeah, I'm going to be watching this. Let's see which mushrooms. We want magic mushroom stocks? You want some magic mushroom stocks? Hell yeah. This stuff. These are the stocks where you just are gambling. So any gamblers out there, let's see which one of these are going to be the new kingpins to gamble on. Oh, marijuana, man. Marijuana's going crazy. Who's that? Okay, who's that? Who's the blue guy? Oh, the nuclear energy one? Oh yeah, maybe that one's going to do better this year. Nuclear energy. How about that? Cool. So we're going to be doing it. What are the snakes you speak of? Snakes? Well, okay, I don't know who's. I don't know. Are you referring to some other chat up here? No clue. Anyway, yeah. All right, guys, just go to Ruby's. Just go to Ruby's. I'll put it up again. Go to Ruby's. All right, thanks. Thanks, viewers. We'll see you next time. And until then, TD2, Tadida.